As I'm presented by the moderator, I'm from Turkey, and we are an insurance consulting group. I'm skipping the presentation part as well, and I'm directly coming to the current situation of motor branch in Turkey and the efforts that we are making to increase the profitability and the government intervention, what the government is doing to help to increase this profit. Now, I will just, yeah, maybe you see it. This is the market loss ratios for motor branch, and we see that until 2013, we had always very high loss ratios in the market for the first 10 and for the first 20 companies. So we see that the problem is spread to the market, so it's not only limited to big companies or the small ones, but it is our general problem. You see from this chart that the return on equity is a disaster, and the results of the companies are very bad in general for the market. Unfortunately, the market is driven by motor branch, the land vehicles plus the liability related with land vehicles, which is MTPL, represents 43%, and this chart includes life. So if you take life out, we might say that more than half of our income is based on motor branch, where we are making loss. In the increase of the premium for last 5-6 years has been always more than the inflation rate. Especially for last year, for example, the inflation rate is 6.97%, where the motor has increased 10%, and the TPL, the liability, has increased 36%. So even though this is a branch that we are making constant loss, it will continue to make also increase. And also for your general information, I might say that the total premium income of non-life branches for Turkish markets is approximately $10 billion for 2013. And the branches by gross written premiums, you will see that in total always 40-45% is coming from motor. Here from this chart, I just wanted to show you that the loss ratio for motor on damaged land vehicles, the first column, was always very high, always a loss, up until the last year, 2013. First time we had the loss ratio 61.88, so which meant that we made a slight little profit. But unfortunately for land vehicles, which is liability, which is MTPL, we had a 85% loss ratio. When you add the 15% agency commission and the general expenses, it's a big loss for the country. I'm skipping this. And about the reinsurance part, as you see, this motor own damage is almost on account, is 96% retention, and the liability is 87% retention. So in motor and liability business, except some small proportional treaties, everything is for the own account of the insurance companies. From this table, you see that the last year in 2013, for the first time, we have made 700 million TL profit for motor, but unfortunately, almost 500 million TL loss for the MTPL. This is the breakdown of the technical profit for motor branch only, and from the red signs, you see that it has always been a loss. And now I will share with you what was the reason of these changes from loss to profit. And you see the loss ratio, when it goes down at the final point, the technical profit, it increases. Furthermore, you will have these charts on our presentation on the web page, so maybe you can go through the details. This is the technical results of last year in all the details. Now I'm passing to the attempts and what we have done in Turkey to increase the profitability. Actually, in Turkey, we can divide the period as before and after year 2000, because before year 2000, the market was totally different. The outlook was totally different. We had a basic tariff, which was just looking at the mark and model, and it was not at all a complicated tariff at all, and it wasn't something very technical. There was no segmentation, no reserve analysis with triangles, etc. There was no actuarial studies. Actuarial studies were only known for life business at around year 2000. The MTPL was a compulsory tariff applied by the government. There was no claims auditing and no subcontractors. By subcontractors, I mean companies such as Asisoft, Autotext, Frix, all of them. There was no company in the market. So it was all done by insurance people. And after 2000, insurance companies have realized that this is getting worse and worse, and they have started to have some preventions. First of all, the tariffs were started to be made based on mark, model, driver, region, and several other variables, and segmentation studies has started to be done. Of course, the pioneers were the biggest insurance companies, and the ones who had some shares of foreign investors as well. And then introduction of reserve analysis via triangles has started after year 2000, and setup of non-life actuarial departments. Then the free tariff came from the government, and they said that, okay, do it on your own, and maybe you will make better profit. But this was, the case was just the contrary, and we made more losses after the free tariff, unfortunately, because of competition. Then insurance companies, they set up claims auditing departments and motor logistics departments, where they were checking the spare parts, the cost of the spare parts, whether the spare parts are charged properly, or whether the motor repair shops are charging us higher costs. Then fraudulent claims committee was set up. Then setup of insurance information center was followed by the setup of TRAMER, the central motor claim system, where all the insurance companies have started to key in their losses, and before any new policy production, they were able to check the loss record, and they were able to apply bonus or malus for the specific client. And new subcontractors for salvage, claims handling, glass repair, fraud detection, car repair, and some others as well were coming into market, and they were presenting their services, and they started to help insurance companies to monitor better the areas of loss. Insurance companies started to have their own repair shops, giving some policy premium reductions to their clients. They were trying to channel them to their own repair shops. International actuarial companies have started to come to the market to make some projects with large insurance companies, and regular audits of the treasury were getting more and more intense, so that they were really closely, and they were chasing closely insurance companies for the benefit of the public. These days, on our agenda, there are some issues. Some of them in the audience were discussed today also, but I never heard something like that from anybody here. But this bodily injury claims in MTPL is a big problem for our country, and especially the Ministry of Health is trying to charge all the high costs of coming from the hospitals to the insurance companies. And that's why last year especially, and the year in 2012, you can see from the statistics, we had huge losses because of these unexpected files coming through the Ministry of Health. Vehicle value loss valuation, this is something new also. This is coming from MTPL policies. Now clients have started to say, okay, you pay my claim, but because of your client hitting my car has lost its value because it's now a car with a damage. And they have started to ask for it, and this is a big question mark. We don't know literally how to calculate it, and people now try to understand, and committees are working on it to come into agreement with us. agreed calculation so that all the experts will be able to apply this loss of value. Direct settlement, here in this document, we see that they were planning to finish it in 2013, but it's not yet there because companies could not come into agreement how to pay each other's claim. This is something very difficult. What we are working on it, maybe at the end of 2014, we will start to pay the claim of the other company and then make the life of these injured cars and people easier. An arbitration system is there because many people have started to go to the courts because of the lawyers who are chasing them at the hospitals and trying to charge us higher amounts than it should be than usual. So what insurance companies are trying to do, before going to court, we are trying to make the arbitration and try to settle the claims. And we see that most of the files open in the arbitration system are coming from motor own damage or MTPL files. So we say what's next. As we see in our market, as the claims are increasing, the premium and production is also increasing, and the loss is also increasing. So we keep trying to find new solutions to make profit. And maybe in other conferences, I might be able to tell you other details. I made it very quick. I hope I didn't miss any important point. Thank you very much.